Next, let's talk about crypto market cycles and market capitalization. So as a market goes through a full market cycle, the total amount of money invested into the market will increase and decrease. Market capitalization is the measurement of the total market value of a coin, a stock, or even an entire market. The formula used to calculate market capitalization is the price of a coin multiplied by the number of shares or coins issued. Now, the total market capitalization is often used in comparisons to other sectors of the economy, such as the market cap of precious metals or stocks. And this can give analysts a point of reference as to how the crypto market can grow in the future. It's important to understand, though, that comparing different financial markets can have its uses. Let's say comparing crypto to the commodities market or crypto to the stock market or maybe Bitcoin to gold. But it can often be a futile effort. Different industries attract different types of investors, and it's important to know that cryptocurrency is still a fairly new and thriving asset class, and it should be treated as such. Sometimes comparing a 10-year-old market to something that's been around for over a century isn't necessarily the best comparison. So let's take a look at a chart of the total cryptocurrency market cap. So this is a fairly almost all-time reading of the total cryptocurrency market cap. So this is based from April 28th, 2013 to November 9th, 2021. And we see overall the crypto market saw some increases. We see in July 17 to January 2018, this was that market cycle, the 2017-2018 market cycle, where the overall cryptocurrency market capitalization reached nearly 1 trillion. That's including all the coins, Bitcoin, Ethereum, and everything else in the space. Following that market cycle, the prices would fall, and as a result, the market capitalization would fall as well. As prices go down, investors take their money. They're not investing in other projects in the field. This essential downtrend would continue up until the year 2020 and into 2021, where the market capitalization would break 1 trillion, even surpassing 2 trillion towards May 2021, and even surpassing and nearing 3 trillion in November 2021. To reflect upon that, here is the market capitalization of Bitcoin. This is a measurement of the growth specifically of just the amount of money invested into Bitcoin. And we see overall prices stayed fairly flat. We see a slight bump here, which would be attributed to the 2013-2014 cycle. And the prices still remained fairly low, maybe sub 100 billion, up until about 2017, 2018, where we see a dramatic increase in Bitcoin's market capitalization in the 2017 market cycle. This trend would continue to drop up until about 2020 and into 2021, where we see the market capitalization, the amount vested into Bitcoin, reach new all-time highs of 1.2 trillion and even surpassing it in Q3 2021. And this has a direct correlation to Bitcoin's price increases, which we see here. At the same time that Bitcoin's market cap increased, we saw Bitcoin reach a high of nearly 20K in 2017. As the market cap dropped, so did the price. There is a direct correlation between them. And we see in 2020 and in 2021, as the market capitalization reached new highs over 1 trillion in the Bitcoin market, we saw Bitcoin reach new all-time highs of 65K and near 68,000 in Q3 2021. And looking beyond Bitcoin, here's a measurement of the total cryptocurrency market capitalization, excluding Bitcoin. So this is a measurement of the amount of money invested in crypto, excluding Bitcoin. And we really don't see any significant increases like we saw in Bitcoin. Particularly, Bitcoin saw a small increase in 2013, 2014, and because the market was still so young and still developing, there really weren't many other options in 2013, 2014 other than Bitcoin. There was a handful of coins, and mainly everyone that was interested in the space was interested in Bitcoin at this time. This began to change in 2017 as we see here where other coins started to become developed and grow, such as Ethereum, Cardano, XRP, and others, where we start to see the total cryptocurrency market cap, excluding Bitcoin, begin to increase towards January 2018. We saw this dramatic decrease, and then following Bitcoin's dramatic increases in January and in late quarter 3 2021, we see the overall market cap, excluding Bitcoin, begin to increase as well, reach new all-time highs of well over $1.5 trillion. So moving on to Bitcoin market dominance. So while studying the growth of the overall cryptocurrency market capitalization is important, many investors gauge what kind of market they are in by studying the ratio between the market cap of Bitcoin to the rest of the crypto markets. And this ratio is commonly referred to as Bitcoin dominance. Essentially, it's a measurement of how much is Bitcoin dominating the crypto market. Now, imagine if the total market cap of all crypto is 100 billion, just to have a nice, even, simple number, 100 billion. If Bitcoin's market cap was 60 billion, then Bitcoin's market dominance would be 60%. 60% of 100 billion is 60 billion. Important thing to note is that market cap does not always mean an increase of money. It's just a measurement based on the circulating supply and the current market price. Once again, you would take the price of the coin multiplied by the total amount of coins available. And here's a visual example of a market capitalization of 100 billion. So here in the blue, we have Bitcoin with 60 billion. So Bitcoin would encompass 60% of this $100 billion total market. Okay. And let's say Ethereum had a $20 billion market cap. That would mean that Ethereum has a 20% cut or 20% share of the total market. And let's say Ripple, XRP, another popular coin that has a $10 billion market cap. So this would have a 10% share or 10% cut of the total market cap. And Cardano would have another 10% or 10 billion out of the total $100 billion market cap. So this is a good way to visualize and understand how certain coins fit in and how big they are taking up of the overall crypto space. Now, Bitcoin dominance over the years. So Bitcoin has heavily dominated the overall market capitalization of the crypto markets throughout much of its existence. In 2013, Bitcoin had a market dominance of 94%, meaning that 94% of the money in the cryptocurrency space was invested in Bitcoin. This can mainly be attributed to the fact that there were little to no other coins created or available at the time. Ethereum was still being developed and constructed, and even Tether, USDT, had not been established yet. During the 2017 to 2018 market cycle, Bitcoin dominance began to fall as other coins entered the market. There's more options. People want to try and find the next biggest thing that's going to raise to Bitcoin's prices. In February 2017, Bitcoin dominance was about 85.5%, while Ethereum was 5.7% and XRP was 1.1%. And over the course of the next 4 months, from February up until May, Bitcoin's market dominance would plummet as new coin projects would launch, bringing in new capital to new projects instead of Bitcoin. This deterioration of Bitcoin market dominance was seen as the first true altcoin cycle. Altcoins are coins that are not Bitcoin. Essentially, money from Bitcoin, or even new money to the market, would flow into these altcoins, these alternate coins, raising these coin prices and increasing their share of the total market. So here's a chart of major crypto assets by percentage of total market capitalization. So this is just a Bitcoin dominance chart. Essentially, it's just a measurement of how coins have taken their cut of the crypto market over an extended period of time. This particularly starts in July 2013 and extends all the way to July 2021. Now, starting in the beginning, in July 2013, we see Bitcoin with this orange line having an extreme dominance of the market, where essentially this is in the high 90s or so. And Bitcoin would continue to dominate the market up until about July 2017, where Bitcoin dominance would fall from about 85% to a low of 40%. And at the same time, we see an inverse relationship. Whereas Bitcoin dominance would fall, we see the valuation and the overall market capitalization of other coins increase, and their share of the total market cap start to increase. Where we see with this purple line here, this is Ethereum. Ethereum would essentially start to outpace the others and essentially have an inverse relationship, whereas Bitcoin would go down in market capitalization. More of that money was being moved into Ethereum. We also see that relationship with XRP. This light blue line here, this is XRP. We see XRP reach a high of nearly about 15% in January 2015, and we see a dramatic fall in Bitcoin dominance, where Bitcoin dominance would fall for the first time to sub 80%. This would continue, and we see in July 2017, XRP would even surpass that 15% level and continue to have that inverse relationship, whereas where Bitcoin dominance would fall, money is leaving Bitcoin, it's entering the altcoins. And this cycle would essentially continue. Going into more recent times, though, as altcoins such as Ethereum and XRP have begun to truly prove themselves and have use cases and build steady networks and users, Bitcoin never truly has regained those higher percentages. So money is much more diversified compared to when it was in 2013. Specifically focusing on the 2017 to 2018 market cycle here, we do see this inverse relationship between total market capitalization of Bitcoin. As Bitcoin market dominance falls, the altcoin market dominance continues to rise. This is just essentially a zoomed in format of the previous chart. We can get a better look at Ethereum, XRP, and in this white or grayish line, this would essentially reflect the others beyond the ones listed here. Instead of other than Litecoin, this could include Cardano, this could include Loopring, and other coins. Essentially, their share of the market share has increased as money has left Bitcoin and transitioned into other spaces. So more on altcoins and alt cycles or alt seasons. So an altcoin, simply any cryptocurrency that is not Bitcoin. This includes Ethereum, XRP, and others, such as Solana. Some consider Ethereum to be too large of a cryptocurrency in terms of market share and Ethereum ecosystem to be an altcoin, but it does not yet have that market control that Bitcoin has for now. For right now, Bitcoin continues to move the market. As Bitcoin moves up, the other coins will follow. Ethereum at the moment has about a 20% market share of the total market, but that could change in the future. Now, as Bitcoin goes through various bull runs or uptrends, investors have often taken profits made from Bitcoin and transferred them into other assets such as altcoins. This can be seen when the price and market cap of Bitcoin stagnates or stays steady or even declines, while the other coins in the market see increases in price and in market cap. And this resulting trend in capital transfer is called an alt cycle or the alt season. Previous alt cycles show that funds typically flow from Bitcoin to larger cap altcoins first, then trickling down to lower and lower capitalization projects. This essentially has a trickle down effect. So an example of this cycle could look like something like maybe funds go from Bitcoin, which has had a market cap of 687,000 at that time, and maybe they would flow into Ethereum. And then from there, maybe they would flow into Cosmos, which would have an even lower $2.5 billion market cap. And then from Cosmos, they would flow into Telos, which would have a $63 million market cap. So essentially think of it as rain or maybe water, where the capital, that liquid capital, is water flowing down the mountain from Bitcoin to Ethereum to lower cap coin to even the lowest cap coin. Here are some charts essentially visualizing this effect. We're going to start in the top left. This is a Bitcoin chart and a price chart, specifically focusing on the 2017 to 2018 market cycle. So here we see our Bitcoin rally, specifically from October 2017 to just about January 1st, give or take, of 2018, where we saw this rally and would end by December 16th, 2017, this dramatic increase. Looking towards the right, we see Ethereum. So here's the Ethereum rally. It's much steeper, not as gradual, right? This has much less of an incline, much more gradual. This one has a much steeper incline. This started later. This would actually start in December and end towards January, maybe even early February 2018. So essentially, this trend here, this Ethereum rally, started later and truly started as Bitcoin was declining. Now, taking a look at the total market cap excluding Bitcoin, we see that alt season started right as Bitcoin was crashing. Bitcoin's highest point in 2018 was just about December 16th. We could even just say January if we want to have a pinpointed location. Here we see a dramatic increase in the total market cap excluding Bitcoin, meaning everything else but Bitcoin. This market cap was dramatically increasing from late December up into January and even into February, where we see as Bitcoin was falling, the rest of the coins, the rest of the market, the crypto market was growing. So to summarize, cycles exist in all financial markets. No asset moves straight up or down in price. Informed investors are buying during the accumulation phase, the bottom, or buying the dip. And this goes against common market sentiment as people are fearful as the prices are falling. Informed investors are selling during the distribution phase, the top of the cycle, as this is when prices are at the highest and market sentiment is the most bullish and the most greed. All right, thanks for watching. If you have more questions or would like to learn more about the cryptocurrency space, be sure to visit us at cryptofowl.com. We'll see you next time.